Hello and welcome to another episode of Financial Deep Dive with CWT. My name is Caleb Tanner. I'm the owner of FinanceByCWT.com, which is a website all about the stock market, crypto, and basically all things finance. And what I want to talk about in today's episode is the website Startengine, and is that actually something that is worth investing with? And for those who don't know, Startengine is a website where anyone can invest into startups. So it used to be years ago, if you wanted to invest into a startup, you either had to have like $1 million net worth or make between like $200,000 to $300,000 a year. If you did that, then you were a accredited investor and you were able to actually participate in investing in startups. But now through like crowdfunding, which is what Startengine does, basically anyone can invest into a startup. You don't have to be $1 million net worth, $200,000 to $300,000 a year. You can just invest into a startup if there's a company on like a website like Startengine that you want to invest in. And that's the cool thing about Startengine. It brings startup investing to everybody. And it's absolutely amazing because, I love investing in startups because, I wanted to take a company that is, less than $1 billion valuation and actually like that I'm betting on that will become like publicly traded, that I think will become like, one of the biggest companies on the planet. And, getting in the ground level is the best way to actually make returns. Like, think about, Facebook, for instance. Like, if you could have bought it before they ever went public, you'd be doing very well right now. And, I think that's absolutely amazing. But also, investing in the startups is insanely risky. And honestly, most people shouldn't do it. I probably shouldn't do it. It is an insanely risky way to actually invest into a company because there is no guarantee that you will ever see that money again. And also, it's not liquid. Like, if you buy a publicly traded company, like if you go buy a stock on the stock market, and then, the next day, you're like, oh, actually, I don't know if I wanted to invest into this company or not. You can just sell the shares and that's it. Like, you're done with it. Or if you invest into it and the company does really well and it appreciates in value, you can sell it at a profit and, like, you've done it. Like, you've made money. But with a startup, it's not liquid. If you buy into a startup, the only way you really are going to make any money off that is if, one, someone buys the company. So if you invest into a startup and someone actually buys the company, you get whatever ownership level you have back. Like, you get money from that. If you invest into a startup and the startup ends up becoming a larger company and going public, you can then trade your actual shares on the stock market. And the last way you can make money from investing into a startup is dividends. Now keep in mind, this is insanely rare, but if you invest into a company and it makes a profit, it distributes some of that profit back to its shareholders, which would be you at that point, and then you make money that way. But most startups are not going to pay a dividend. It's going to take a long time for these companies to actually become profitable businesses. And honestly, they don't want to be profitable either because usually profitability is a sign they're not growing because they're not investing into, more they're not using that money for growth anymore. They're using it as profit, and that's usually not a good sign to begin with. But those are the three ways you can actually make money through investing into a startup. So if you're thinking about investing into a company, or investing into like different startups on Startengine, it's beneficial to actually know how many people that have invested in Startengine have actually made money. And that's something that I've been looking at too, because I want to start using Startengine to invest into startups. But it's, is that actually a good decision? Like, should you do that? And so from the research that I've found, only one company has actually gone public through investment, like that was on Startengine. Like, only one company has ever raised money on Startengine and then gone public. And that company has not really done well at all as a publicly traded company. Like, their stock is insanely down right now. Basically, though, if you would have invested into this particular company and then when it went public, sold it immediately, you did pretty well. But if you held it, you're doing pretty terrible right now, and that's just the reality. And I think that's interesting, but also that's not enough of a reason for me to say that I wouldn't invest through Startengine. Because, yeah, only one company's gone public, but also it takes a long time for a startup to actually go public. And it's actually taking even longer now. Like, I think I read an interesting statistic that said most companies, it takes 8 years now to actually go public, which it used to not take that long at all. It used to be closer to 4 years. But now most companies are taking around 8 years to actually go public, which is bad for investors because that means you're going to wait a very long time before you actually get any of your money back. But again, since Startengine is such a new service, it makes sense that they haven't had many companies on Startengine actually reach the level of going public. It actually makes a lot of sense for that to be the case. And one thing I like about Startengine, and the reason that I'm really interested on it, is because they're actually bringing liquidity into startup investing, which is something we've never really seen before. Like if you invest on any other platform, it's what I said earlier. They're either going to go public, get bought by someone else, give you enough in dividends, or you're never going to make your money back. But with Startengine, it's a little bit different because they have this other thing. It's called Startengine Secondary. And how that works is, let's say that you bought into a startup on Startengine. And, they raised money at, this valuation. Now they're raising money at this valuation. So your shares of the company have they've appreciated quite a bit. But, obviously you don't have any liquidity. It's not like you can just sell it. Well, you can now with Startengine Secondary, which is a place that you as a shareholder in business can actually go sell your shares, which I think is absolutely genius, and I cannot believe this actually exists, because it solves the biggest problem with investing in startups, which is the liquidity problem. You have to wait and stay a long time to actually make any money from holding the shares. But now you can invest into a company on Startengine, sell your shares, later on Startengine Secondary, and it actually brings liquidity to your investment. And Startengine is something I've been looking at quite a bit. Like it's something I want to start investing in myself. And Startengine themselves have actually raised money. They're actually currently raising money on Startengine at a $1.5 billion valuation, which a lot of people have said that, they're insanely overvalued, but I actually don't necessarily agree with that. I think with the market they have right now and the rate that they're growing and the rate that crowdfunding itself is growing, that it makes a lot of sense for them to be basically raising money at that valuation. Like I don't think that's a bad valuation to get in at, personally. But no, I really like Startengine themselves. There's other crowdfunding platforms out there like Republic, for instance, which I'm also a really big fan of. And I just think that with Startengine Secondary, there's an opportunity to get your investment actually liquid that doesn't exist really on any other platform that I've seen. And I think that that is absolutely huge. So if someone wants to invest in Startengine, first thing they have to realize is one, it's a lot of risk, right? Like 90% of startups fail. You're not going to make any money from them at all. Like you have to realize when you invest into a startup on Startengine, more likely than not, you're going to lose your money. That's just a simple reality. And in fact, if you ask any angel investor, in fact, I was listening to an interview by an angel investor, and he said that he usually invests in like 20 different companies at a time with the knowledge that like 18 of them are going to lose money. But the two that do make money make so much that it pays for all the others. And that's kind of how, it's the best really to go about angel investing or investing into startups, is you're probably going to lose all your money on, when you actually invest in a company, you're probably going to lose it all. That company's probably going to fail. But if you invest to enough companies and one of them succeeds and succeeds really well, you're going to be making a good amount of money, which I find very interesting. And it's something that I want to do. Like, I really want to get into companies while they're private. Like companies that I think realistically have a possibility of going public. And looking at Startengine, there is a good amount of companies on there. Like companies that I find absolutely amazing. I saw a company the other day on there as a camping company. And that's a sector that I'm trying to invest more money into. So, yeah, like looking at the company's financials and all that, I think that's a company that's going to do tremendous, I think they're going to be tremendously successful. And I think that Startengine gives investors, kind of a leg up over every other kind of like private investment someone can make, because it's a lot easier to get liquidity. It's a lot easier to sell your shares. They don't have to go public anymore. They don't have to get bought by someone else. They don't have to like pay the dividends. I mean, yeah, the first two are still preferred. That's still how you're going to make most of your money. But if you invest into a company and it starts raising money at a much higher valuation than when you bought it, you can sell your shares of Startengine secondary and actually get liquidity. Like, you could actually make money faster through investing in a Startengine. Just know that it's going to be insanely risky. And that's kind of my thoughts on that. I think that's something that I think Startengine's actually doing something amazing, and I'm a huge fan of the company and the people behind it. And while I'm not an investor in Startengine itself, I do want to be and plan to be. And yeah, I think what they're doing is absolutely amazing. And I definitely will be investing in companies on Startengine pretty soon. Thank you so much for listening to this episode of Financial Deep Dive with CWT. Push that subscribe button, like the channel, hit the notification bell, all that stuff. And thank you for watching.